What's up? I'm Dan Fredenberg, and this is another Chance Encounter. Hey, what's up? I'm Dan Fredenberg. I'm a commercial real estate guy. I'm from the internet. Power lines that are just kind of close. What's up again? This is Dan Fredenberg. I'm joined today with Joshua Ferrari. How you doing today?
Good, man. Looking at this $1 million monitor you got behind you, I'm doing fantastic. It's like looking at the Taj Mahal, you know.
All right. We're across the road from it, right? So there you go. So for those of you who haven't seen a chance encounter before, what happens is I investigate the background of commercial real estate investors, and I say, okay, well, there are 5 different motivations I've found for why people want part of another commercial deal, and I say, which one's you? And then I go through the 6 different roles in a commercial deal, and I say, which one's your core competency? But if you're going to have any success in real estate or otherwise, one of the most important things for you to be able to do is introduce yourself. So Joshua, could you please introduce yourself to the audience?
Yeah. So Josh Ferrari here, currently owning / operating with my 2 business partners, a company called 3 Beach Capital, which is primarily focused down here on the Gulf Coast, Southern Alabama, Northern Florida Panhandle spot. We've got about 327 units right now. We actually became an entity early 2021, but I personally had been in the industry for probably about 3 years prior to that. Didn't really get deep into multifamily until about 3 years ago. Then it took a full 2 years of just going at it before we finally actually closed the deal. Closed our first one, and now we're where we're at today, 327 units. It comes out to be about 19.5 million assets under management. We're shooting for $100 million assets under management by the end of 2023. So we got about 2 years to get there. Fully believe that we'll surpass it at that point, but right now that is our big, hairy, audacious goal and where we're headed.
All right, that's exciting. So I'm going to hop into the first segment, which is when I hit that button and then I maximize this one right here and I hit present and boom. So people, when they're just getting started, they know why they want part of a commercial deal, but they don't necessarily know what they're going to do. So that's why I start off with this motivation piece. The first reason why people want part of a commercial deal is to preserve their purchasing power. So if you're a family office or something like that, what's going on is you are making ends meet based on the cash flow of your wealth. Basically, what's your wealth doing for you? And inflation is the big fear that is why they constantly have to be making new acquisitions, or else the party is going to be over. So that's reason number 1. Reason number 2 is my one. Now, because I'm in tech as a background, that makes me a high earner. And so I have the option of getting the high salary and then dumping whatever savings is left into wealth and therefore cash flowing assets. Easy for me to say, but it makes more sense. It made more sense for me to pivot and then try to get into more equity positions as a GP. And then that way I'm getting rewarded for my time in the form of wealth instead of the highest tax bracket, which is income tax. The next reason is the most common one. People want to fast track their retirement. And so one thing about fast tracking your retirement means that, there has to be something already started. But the bigger one is that it implies that there's a goal in mind. And some people, they will become an accredited investor. They'll know that they can move someplace like the Philippines, where the cost of living is super duper low. And maybe that is their end goal. Whereas the next group, they are way more ambitious like that. They want to buy their entire hometown. They want to have a legacy that'll last multiple generations. They're super ambitious, and they're great people to have around because they will keep hustling into their 90s. But the last group It's people who have some sector of society, or maybe they want to buy rainforest or something like that. There's some sector of society that they realize they really want to make a big part of the meaning of their lives, and they realize that accumulating wealth is the best thing you can do as far as a vehicle to make impact in that part of society. So out of those five different motivations, Joshua, what combination describes you best?
I think trading time for wealth or whatever that one was is
Mhm.
probably a big one. That one, and then it was like I said, a rational need to help tenants or something like that. But it sounded
Mhm.
like the description behind it was kind of making an impact and truly making a difference in not only your life but others' lives. And I think those two describe me fairly well. I really wanted to get into this business because I was tired of the W-2, which I actually still currently work full time. I'm hoping next year we'll finally be able to get out of that. Um, but just the consistent grind, knowing that I'm not really going to get anywhere. So before I actually got into real estate, my goals were basically I'm an aircraft technician by day. So I thought, okay, I'm going to go move from Memphis, Tennessee, where I'm initially from, move down to Mobile, Alabama to start what I thought was going to be a long-standing career as an aircraft technician. Get your standard couple years experience that you need to eventually segue into a larger company that you're going to work for 30, 40, 50 years and retire wherever you retire, doing whatever you do. Well, after being introduced to the mindset and the shift that is kind of wealth creation and real estate as a whole, I thought, holy cow, there's actually a way for me to not have to live in that day-to-day minutia and go to work every single day doing something that I maybe aren't necessarily gonna like in a couple of years. Like, yeah, I like it right now, but 10 years from now, am I still gonna like it? 20 years, 30 years, 40 years? No one can look that far down the road and be like, yeah, I'm still gonna love it. No, your passion might dwindle. You might hate the boss that you work for or the company, but you don't want to switch because your family's in town or because you've already built a life in this particular area or your kids are already going to the school that they like. And so you're like, well, I just can't move. So I'm just going to be miserable for the rest of my life. I didn't want that to be me. So I got into real estate because I wanted to trade my time for that. So I'd say that's a big one for sure. And also, I just wanted to spend more time with my family. I'm like, okay, one day I want to have kids. One day, I'll be married. I think I was actually married at the time. I was married. One day I'll have kids and we'll have a full family. And I want to spend time with them. I want to watch them grow up. I want to travel with them. I've always loved aviation. So I want to get my private pilot's license and we'll fly around. We'll go to Disney World one random weekend. We'll go get breakfast all the way up and like California or something, and then we'll just fly back for the day. Like, I don't know. I just really want to do fun, crazy stuff traveling around. And I want to do that with my family. So that was a big thing. And then the other thing is actually making an impact in others. Because once I found out that this was a thing that could happen, you could actually get out of your W-2. Holy cow, an average Joe like me can actually do this. This is insane. Well, okay, now I need to tell everyone else about it. Everyone that doesn't already know about it, they need to know, and I need to educate them on what's possible. And maybe they don't want to get into it, and that's fine. But at least I've let them know. I've done my part of being like, "Hey, did you know you could actually do this?" And then that's when I kind of found multifamily syndications in the commercial space. And once I found that, I was like, wow. So not only do I get to grow my wealth and then my business partners and anyone else that's on a general partnership team, but I'm also providing these investment opportunities for other people that are maybe too busy or don't have the time to figure out how to do all this stuff and have a little bit of cash laying around. Or they've been in their job for 10, 20 years and they're looking to finally get out. So they've got this massive retirement account somewhere they're looking to invest. It's like, wow, I'm getting to provide opportunities for them as well to do the same thing. We all kind of get to grow together, and then you don't make just an impact on the GPs or just the LPs, but also the community that you're investing in, the actual apartment complex that you buy. So making an impact on those tenants. And then I also eventually would like to make an impact on that community as a whole. So if we were to buy a deal and say Mobile, Alabama, which is where I'm currently at, I would also like to give a portion of the proceeds once I finally get out of this W-2 and get the business up off the ground, give a portion of the proceeds to some kind of charitable event or some kind of something that actually impacts the entire city that the community's in. Haven't fully deciphered what that looks like, but all in all, I think it's time for money or time for wealth and then making a true impact on others.
That's beautiful. That's a beautiful thing. All right. So, and then as far as specifics, getting down to brass tacks, I've got the six different roles in a commercial deal on this Dan Does Deal Die. So let's go through them for the audience. The first one, if the camera ever adjusts, it's repositioner. And repositioners look at lots of different deals. One of the most important things that they do is they have to underwrite the property. And that's a fancy word that means do the math. Find out if it actually makes sense as an investment. And then the other thing that a repositioner has to do is they have to figure out if there's any sort of upside that can be created on the property. The two different main ways that you get upside are more efficient operations. You bring your costs down. I've also got some Benjamins going down the toilet here, and that's also to indicate that bookkeeping is part of the GP operations team. Marketing to make sure that the vacancy rate is low. That's part of the GP team. That's more efficient operations, more profitable operations. So that's one different way that you can get upside. Right now, the market is so hot, that's probably not going to cut it. And one of the other most common ways to get upside is to get a contractor team. You make the place nicer so you can charge more rent. More rent is more money. More money is upside. So one problem that a repositioner might still have, though, if they have the contractor team and the operations team, is they might be remote based like me. So I don't want to have to get my passport every time there's a problem. So we're going to need a local in the fold. You need somebody who can be there on short notice, and they keep tabs on the operations, make sure they're doing their thing. And same with the contractors, no cutting corners, all that sort of stuff. So normally that's what you think about when you think of the owners of a building, but part of taking it down is talking to financiers. So that's the bank, and capital raisers would also be a form of financier. The repositioner will turn around to the financier and say, hey, I need a loan to buy this property. And the financier will go through the numbers, say, okie dokie, but then they'll also want to know who's your sponsor. That if you want to get a loan for, say, a 350 unit apartment complex, then somebody in the fold has to already own a similar asset. They have to own a 350 unit apartment complex. There are also liquidity requirements, and also you need a balance sheet of at least the amount of the loan. But those are the six different roles in a commercial deal, and those are the pieces of the puzzle to make it work. So Joshua, as far as core competencies go, which of these roles are you most likely to contribute in a GP team on your next deal?
Well, honestly, financier, that was one specifically to getting like a bank loan.
Yeah. So yeah, sponsoring would be part of that, but yeah, capital raiser would be the other type of
Okay.
financier. But
Yeah.
you have to have some sort of extra thing going on to legally be on the GP team of
Right. So
operation.
primarily what I am in my our trio of a team is the investor relations guy. So I've got the majority of the relationships with investors, primary capital raiser, handle actual continual investor relations after the deal's already closed. So that's monthly or quarterly communications, that's distributions, that's K1s, that's just updating them in any capacity. And then also upkeep of the actual investor portal, making sure that all that's functional and actually obtaining the cash once you raise it, and making sure that they understand the whole PPM process and getting them to sign that and all this, that, and the other. So investor relations is a big piece. Another piece I'd say is asset management. So I am actually local. I don't handle the majority of the asset management. You mentioned local. I'm boots on the ground without being boots on the ground. If that makes sense. So
Yep.
I've
Like
got a secondary
manager,
partner
yeah.
that actually lives in Gulf Shores while I live in Mobile. So we're both fairly local to this spot.
Mhm.
He just has a bigger drive and a bigger passion for asset management than I do. So he was more than happy to take over that. I think he's honestly better fitted for that role anyway of managing people.
Mhm.
So he's kind of our primary asset manager, but I help out where it's needed. So if he's unable to meet with a property manager some specific day for any reason, or for me to just like show up at the properties randomly and take pictures and do a walkthrough and just kind of like random inspections, make sure property management companies doing what they need to be doing, and so on and so forth. So I help with asset management in that regard. But primarily my goal, you could say, would be the financier from a capital raiser perspective, investor relations, and then also, I guess, KP. I didn't have any large experience previous, but as we've continued to grow our portfolio to where we are now, we all kind of play the KP role inside of our own deals. So with us as a trio, all of our, liquidated our liquidity together and our net worth together and our experience together, it all allows us to actually close deals on our own without having to bring in a third party key principal partner or any other GP. Now, that's not to say we haven't sponsored with people in the past, because we have, because there's always going to be a larger deal out there that we've never done before, so on and so forth. Like this past year, we closed a 148 unit portfolio, and that's the largest we've ever done. And so we had to bring on a KP team for that. But yeah, you could say it's the financier and a little bit of asset management.
Right, right. Perfect, perfect. And so you mentioned some numbers as far as unit sizes, and you've also mentioned some geographic areas, but I didn't catch anything about the classes of the property. But if you want to recap your buy box, just so that if somebody's fast forwarding, they can find it. Do you want to give some insight
Yeah.
as far as what your
So
ideal property is?
primarily what we're looking at is anywhere between 40 to 200 units, B2C class value add assets. We have never done anything that's new development in the past, but that 148 unit portfolio I was telling you about, we've got about 8 or 9 acres that came with the portfolio, where we could probably add another 60 or so units. So we've dabbled in the idea, talked to a couple of developers, but we're still dabbling. So that might be something we'll eventually get into, a little bit of new development, but primarily it's value add. It's in the Southern Gulf Coast regions. So we're in Southern Alabama, Northern Florida. We started branching out into some of the more northern MSAs of Alabama, like Montgomery, Birmingham, Huntsville, but also we've started branching even further west into Mississippi. We also have started to see some pretty good opportunities and growth over there in the Mississippi market. So that's kind of the core buy box, like you said, core criteria focus that we're targeting. And then of course, this is our primary region of interest. And I say this is our primary region of interest because these are all the locations we could buy a deal on, just the three of us. Now, that's not to say we wouldn't be interested in other opportunities. We actually currently have a deal under contract in Austin, Texas. So we're also willing to go in other areas of the United States, of course, depending on the markets and specifics and economics and all this, that, and the other. But if we were to enter into a market like that, we would need someone, like you said, that was local, that was boots on the ground in that area. So partnerships is always an opportunity, but that is our buy box.
All right, excellent, excellent. And one of my favorite things about commercial real estate and the community in general is that people are so helpful to each other. And I'm confident that that's because it's so multifaceted. Like nobody has time to be all of them. It just won't work. And so everybody's looking to help support each other. Now, my next question is like, who can you help more than anybody else in terms of real estate? But I have to make a warning that the SEC has restrictions against enticing investors. So without enticing investors, can you please describe who you're able to help more than anybody else? Maybe like a beginner or somebody who's, anything like that. Like who are you best suited to help in
Now, this is best
commercial real
suited
estate?
to help on the active side or the passive side.
It's up to you. Like I mean, like whatever you find that you can really do more than you can other types of people. So like some
Uh,
people need sweat equity people, other people need more financial backing or something like that. But yeah, you can't entice investors.
I feel like we've had great success in actually, and this might sound crazy. I might say this, and you're like, well, shouldn't every sponsor do that? Shouldn't every investor do that? Isn't that the whole purpose of syndication in the first place? But you would be extremely surprised once you break into the industry to find out that this is actually not the case. But I feel like we've had nothing but great success actually performing on our projections, and not just performing, but exceeding. And I think a lot of people throw the word conservative around there a lot. They throw the word value add out there a lot.
Yeah,
But
off market.
I,
Yeah.
I, I find myself to be the extreme optimist of the group. And then one of my other partners, Reggie, I find him to be the realist. He can kind of see both sides. And then we've got Matt, who's kind of our primary underwriter, who is deadbeat pessimist. if he can't kill the deal, it's a good deal. So I know if he's underwriting it, it's like next level conservative. And we've been able to use that to our advantage because we've been able to scoop up some pretty good opportunities and actually perform on the projections that we gave our investors in the first place. We've got both my partners actually are LPs in a couple of other deals. And of course, we've got a whole slew of investor network. And I've heard that the continuous problem out there is that you'll invest with someone and they won't come through. They won't produce what they've said they will. They'll say that you're going to get some 8% pref, or you're going to double your money in 5 years, or you're going to get quarterly communications or monthly communications, even something as small as communication. And then the sponsor just doesn't come through. I feel like we make it a hardcore point to come through for our investors, to come through on the projections, and to actually perform how we say we're going to perform, if not better. So I think, and I don't know if all of this plays a part into breaking SEC regulations, but I feel like we play a strong role in performing. So I feel like we're able to benefit the passive investor from a significant way, but also I think from an active perspective, someone looking to break into the industry or something like that. I've got a podcast myself called Creative Capital, and I make it a point to educate the passive and the active investor, but I think primarily it goes towards the active because we bring on a lot of high level professionals that are in the active space, obviously. And so we talk a lot about how to do things, how they did it, how they overcame certain things. So I think that platform alone helps me significantly help those that are active, but also my social media presence and different platforms on LinkedIn and Facebook, I think has helped a lot of folks. Just even something as simple as saying, hey, we've closed a deal. Then folks are like, oh my gosh, I want to reach out. And then they schedule a call with me. Before you know it, we're just like what we're doing right here. You know, you're on the phone, you're chatting with someone, they're asking questions. How'd you do it? How did this work? Tell me more about this. And I'm more than an open book to let you know how I did it. May not work for you, but just another point of reference, another success story. I know that's really what helped me get through those like 2.5 year dry spell of closing no deals. It was like, oh my gosh, is this ever going to work? Should I just quit? Should I just give up? Hearing all the success stories of others that had similar backgrounds as me, same age, came from nothing, had no money, that hearing them succeed is like, oh, okay, well, if they can do it, I can do it. I just got to keep sticking at it. So if nothing else, just contacting me to hear a success story. I don't know, try to keep you going. And yeah, so I would say those are the two best ways that I feel like I can add value to those out there that are listening, whether they want to be on the active or the passive side.
That's amazing. And you mentioned your podcast, and we met each other more or less through LinkedIn. What's the best way to reach out to you, Joshua?
I think going to our website at ferraricapital.com is probably the best way. All of our social media links are there. The podcast information is there. You can sign up to be on our investor portal, our investor list. You can get our monthly newsletters. I mean, you can all of the good, juicy resources and ways to get a hold of me here, right there on the website.
All right, excellent. And if you don't know me, I'm Dan Fredenberg. My background is in mass marketing, which is lead capture, lead generation, a bunch of content creation and stuff like that these days as well, but building funnels for capital raising and different things like that as well as far as the digital assets goes. But if you, yes, you in the camera could do me a great big favor, under my left hand, you'll see a red button. Please click on it and make it gray, because red means angry, gray means happy, gray means that YouTube pays for these videos instead of me. So pretty please, with sugar on top, just hit the button, and it doesn't cost you anything. It just means that it might add my videos to your list of suggestions, and it makes a big difference as far as I go. So I appreciate that a lot. Speaking of appreciating things, Joshua, this has been amazing getting to know you a little bit better. Thank you so much for joining me.
Yeah, absolutely. Had a good time.